This is another episode of Crypto and Cocktails, the official 107capital podcast. My name, as always, is Tyler, and this is our man of the hour,
Timnihill.
So today we're going to kind of do a return to form. We're kind of going back to our traditional formula. I'll put the recipe up on the screen, but we're, starting to do more elaborate cocktails. And I wanted, to make an old classic this episode. So this time we're doing a Manhattan.
Old classic. Huh.
Cheers.
Cheers. Cheers to my grandparents.
How come cheers to your grandparents?
So, my grandfather would make my grandmother a Manhattan or two every night.
Really?
Yeah. So, years after my grandfather passed away, on my father's side, I asked my grandmother, I was like, oh, what do you miss the most about my grandfather? And she said, oh, his Manhattans. And, you have your typical Manhattan cocktail and recipe, good bourbon, which we use Woodford here, because we like Woodford. Use sweet vermouth. You got to get really good vermouth. You have to get really good bitters, like orange bitters, or people do different flavors.
Mm-hmm.
But then you get the Luxardo cherries, the dark cherries and the dark cherry juice.
Does it have to be that specific brand?
Yes. I don't know any others. But basically, my grandfather said you take a little bit of the cherry juice, you pour it on the bottom of the glass, and then you pour the Manhattan over it with a couple cherries, and voila. And then as you continue to drink the cocktail, the flavor gets more depth, more cherry flavor, and it's just delicious.
It's like when you're making a North Shore beef sandwich, you have to have Duke's mayonnaise.
I guess.
You've posted, haven't you posted, speaking of North Shore beef, haven't you posted that on your Instagram one or two times?
Yeah, my Instagram is kind of like an homage to the family. And I'm just taking all the recipes that we really like, although I'm not keeping up with it as much as I could be. But at some point when, everyone's on their own, they have all the recipes that we love in our house. Everything's pretty much made from scratch. And at the same time, it's like in our busy lifestyle as a family of 7, these are recipes that you can, for the most part, whip together very easily, and they're fantastic. And then, for some reason, I have a knack with Italian food, and so I
have heard this.
I use real. What do you mean you've heard it? You've eaten it.
Yeah, that's true. Your carbonara is very good.
Carbonara, chicken parm. It's actually chicken cutlet, chicken parmesan's an American thing.
I mean, I've heard it from...
It's just like real deal, like Nana type recipes.
No, I mean, I've heard it from like other people too. Like everybody loves your...
And at some point, I may put my buffalo wing recipe out there. If I sold buffalo wings, I'd probably sell 1 billion of them.
Yeah, maybe. I've been telling this guy for a long time he needs to open up a food truck.
I know, but finance is so fun.
It is, especially what we're going to be talking about today.
What are we talking about today?
So, and this is kind of where the Manhattan comes in, It's kind of a city theme. It's named after a city, and a lot of what we're talking about today happens in cities. Figured, it's close enough. Kind of just an excuse to drink a Manhattan. I love these things.
Fantastic.
But, no, so what we're talking about today is treasury assets. More specifically, because I know you had mentioned it on a previous episode, what a treasury asset is, and more specifically the value of Bitcoin as a treasury asset. And you had also mentioned that at the Bitcoin 2025 conference, that was a big part of what they devoted one of the days to, was Bitcoin as a treasury asset. I kind of wanted to do a little bit more of a deep dive into that today. So I think a good place to start would be, I guess sort of restate, because you've already stated it on previous episodes, but I guess kind of restate, what exactly a treasury asset is, and then, why is it important for businesses, organizations, families, stuff like that.
Yeah, so treasury assets are basically part of your capital stack. Treasury assets are usually the pool that are your most liquid, most secure, and they're really meant to protect your purchasing power over time. So whether you're a family, a legacy, a pension, an endowment, an institution, a company, small, mid, large, it's almost like, what's my most liquid bucket that I can have? Almost like your safe money, that should I need capital for immediate investment, additional investment, protection during market cycles, whatever, I have this pool of capital. And then over time, it protects your purchasing power and you just want to grow it, right? So if I was building a kingdom, it would be the core of the kingdom. Like, what's at the core?
Yeah, that's
And
the
in
treasury.
medieval times, kingdom times, it was all gold and what have you.
Oh, we'll talk about gold.
Yeah. So traditionally, your treasury reserves, even as something as like a HOA that you live in, right?
Mm-hmm.
Like we have an HOA here in our condo complex. They have a treasury reserve. And traditionally it's commodities and cash and bonds. Well, now it's Bitcoin's a part of that. Bitcoin's a treasury asset. What the heck? Bitcoin's a treasury asset, and it's replacing cash and replacing bonds. Because when you really look at your cash positions, and you're realizing that cash is garbage. The US dollar is trash. It's lost 99.9% of its value over the last 100 years. So really, what are you holding on to?
Yeah, exactly. And we'll
Like in
we'll
the
get into
traditional
that.
wealth management space, they're like, oh, you should have 3 to 6 months of cash on hand in case of a rainy day. Nonsense. If you have 3 to 6 months of cash on hand, you're wasting your money. That's a banker's idea because it makes them wealthy.
Yeah, and we'll get into that. We'll definitely get into that as well.
Right. So then you have to look at bonds. Well, it's great that you can get 3 to 4 to 5% out of a bond. Maybe push 6 to 7% if you're in some sort of muni and it's tax efficient, but it's still losing money.
Yeah, no, we're going to talk about those as
Inflation
well.
is 7 to 12% year over year. So when you buy a bond, you understand that you're basically locking in your loss every year. So you're guaranteeing yourself every time you buy a CD and a bond, you're basically guaranteeing yourself a loss. So bonds don't work. And if you Google repo market September 17th, 2019, September 17th, 2019, you'll realize that for the past, 6 years almost, that the bond markets are broken.
Yeah,
It
no,
makes 0 cents to buy a bond.
we'll definitely talk about that as well.
So now you're like, okay, what is out there that's going to protect my purchasing power, especially because in the United States, we have a massive debt crisis at the government level. Forget the personal level, but then you have money printing. You realize that cash is trash, bonds don't work. The other thing is I have commodities like gold and silver. Great, but they're not liquid, they're not transferable.
Yeah, we'll talk about those as well.
So I need the one asset in the world that's sovereign, that makes me money, that I can earn yield off of, and that has complete liquidity and transparency in a decentralized sovereign fashion. The only asset class and the only asset in the world that does that is Bitcoin.
Yep. So I think let's do a deep dive into all of those components because all of those are very intertwined, and there's definitely a lot we want to unpack there. Um, I think that was definitely a good summary though to get us started, but so I think a good place to start would be what you mentioned earlier, traditional treasury assets. Um, and kind of how effective, or I guess more accurately, how otherwise they are. I think kind of walk us through, especially, government bonds, cash, and then gold, stuff like that. Kind of walk us through how effective or otherwise they are, and then we can kind of go into Bitcoin from there. But I think those are a good place to start. What's up with those? And
Cash and treasuries and bonds were effective in the 80s and maybe the 90s. But the game's changed. And what people don't understand is real economics. And I'm talking not the Keynesian economics that everyone's has jammed down their throats in econ class in college. Oh, governments need to intervene. Well, if government intervenes, you don't have free capital markets anymore. So then you have central bank injecting capital into the system instead of letting all these companies go bankrupt. Nothing's too big to fail. And the problem is now your entire system is tied to the Federal Reserve changing rates and M2 money supply. And if you see the chart for the money supply since 2008 and how fast it's increasing, you'll realize that your investments are not making you money. Your S&P 500 is not up, it's actually down over the last 17 years when you take into account the devaluation of the United States dollar. So no, cash is not a safe vehicle. It doesn't protect your purchasing power. Bonds are no bueno. Like they're garbage. Like you should sell all your Vanguard bond funds because they're not going to get you anywhere.
especially nobody likes Vanguard.
People are blind to Vanguard, but that'll be another session on another day. So bonds don't work. Cash doesn't work. Okay, so where am I going to go? Well, I can go physical gold, right? Paper gold's great if you own like IAU or GLD, but the problem is for every ounce of gold that's actually held by the ETFs, there's $250 worth of gold contracts, paper contracts written on top of that. So should gold ever go on a run, those ETFs will lock up because they can't cover the upside. The institutions can't buy enough gold to cover the contracts, the future contracts, the puts and the calls and everything that are written over the top of that. So even the ETFs don't work. The mutual fund-based exposures don't work. So you're looking at physical gold, which is fine, but if I have a big treasury reserve, do I really want to buy $200,000 worth of gold bars?
Yeah, because that's physical. You have to load that
It's
up onto the ship.
physical, you have to store it. If you have someone else store it, it's a pain in the ass because it's expensive to pay them for it. And then because the overall appreciation over time is so in relative to dollar, you're kind of like, it's kind of a waste of my time. So I need something that's fixed in terms of supply. I need something that's liquid and immediately liquid. I need something that's transferable should I choose to use it. And transferable, I mean at the speed of light. And then I need something that works in the system that we're currently in. And that's Bitcoin.
Yep. So I think
And
that's
as much as everyone likes, oh, it's volatile, it's like, no, zoom out of the chart. It appreciates relative to the US dollar and real assets in the United States, including real estate, private equity, private credit. It's growing at a clip of 29 to 65% year over year compared to what you're benchmarking it against. So you have to change your point of view and get out of this perspective and paradigm where you're pricing your life according to US dollar. You should be pricing your assets according to Bitcoin.
Yeah, and I think that's definitely a good place then to get into Bitcoin itself. I think, I mean, there are several points that we can come at this from, because really it's not even a debate. I mean, there's the whole argument over, oh, is Bitcoin, so and so, but really it's not even a debate because everything is out there. It's a matter of, are you looking at it or are you not? So there are several points we can come at it from. I can, and I'm gonna rattle each of them off, and I kind of want to know sort of your thoughts on them, a little bit more details along that vein, because really it's a very multifaceted asset. I would even say more than most other types of assets, most other types of traditional assets, and that's what really makes it stand apart. Um, but obviously, the first one has to be, its limited supply, because it's not an infinite thing. You can't just print it forever.
You can't. And so Bitcoin will be mined until the year 2140, which means more Bitcoin coming to market. So it's a limited supply. And we're at the threshold and at the point where we're going to go in the Bitcoin space into supply shock. Like, think about this. Within the past week, 12,400 Bitcoin were purchased by institutional buyers, right? That's $1.3 plus billion worth of Bitcoin was purchased in the last 7 days.
Nuts.
We're about to hit the point where no one will be able to, at least most, will not be able to acquire one full Bitcoin ever again. And if you look at the world population, 8 point some billion people. Yeah, I called them dollars. That's awesome. So
well, that's
8.12 billion people across the world.
That's what the banks see them as.
Yeah, exactly. You're just inventory. 8.1 billion people onto the Bitcoin network that has 21 million total Bitcoin. So everyone's going to be buying a fraction of a Bitcoin now, right? Except institutions, because they're going to buy at higher price points because they can. And the other thing about it is the whole thesis behind Bitcoin is you're supposed to at least own one Satoshi, which is 1/1,000,000th of a Bitcoin. And if you own one Satoshi, that protects your family and legacy going forward. I could argue it's more. But the point is, we're in the beginning stages of basically what's the gold rush, the Bitcoin gold rush, because it is digital gold. And so if you think about the Oregon Trail game, now all the families are starting to load up their wagons and starting to caravan it across country.
Yeah, I mean, I heard a lot of people, one of the things I've often heard people say is, oh, the really big boom period for when you should have gotten Bitcoin was, when it first came out. But I think really and you've mentioned this in previous content as well, really it's now, because that first period in the mid-2010s, that was kind of like, the first panners just finding gold in California in the rivers. And then now, like you said, especially after the most recent election, when now there's a crypto-friendly administration in the most powerful country on the planet, wanting to make the U.S. the crypto capital of the world, which they may very well do with the resources they have.
They just started pushing using crypto to back mortgages as collateral for mortgages.
Exactly. Like, now we are going to start seeing, this gold rush. I mean, arguably, we've already started to see it. We've started to see it, straight up.
It's already happening. So I think the supply squeeze, not short squeeze, because we've been short squeeze for 4 years now. The supply shock is going to happen within the next 30, 60, 90 days. The other thing you're going to see is, as Michael Saylor would say, this is the equivalent of getting in on New York City real estate in the 1600s, before the U.S. was even formalized as a country.
Before it was even New York.
Right? Right. Before New York was New York, it was New Amsterdam, run by the Dutch. So you're essentially the Dutch in digital space, purchasing digital real estate in New York City back in the 1600s. And Fidelity came out, and there was a report I was reading today where they said by 2030, one Bitcoin will be equivalent to $1 million US. By 2038 to 2040, one Bitcoin will be valued at least $1 billion.
So it's going from a million to billion in that short of time.
And that's Fidelity. The billion number, to me, I can see it. I think of the number for me is more around if you look at all the financial assets in the world at about $900 trillion across the world, I could see all those assets priced relative to Bitcoin, which then priced relative to the US dollar is about 43 million per Bitcoin. That seems more logical or reasonable to me.
But still, I mean, it's a glowing endorsement from a company that otherwise.
A million by 2030. I think a million happens a lot faster, especially given everything that's been going on in the last 6 to 9 months.
Mm-hmm.
So, a million, absolutely. I've seen 13 million. In my mind, the Bitcoin is relative to the US dollar 43 million, but then you're going to be looking at US dollars relative to Bitcoin. So I only care if you own Bitcoin. And then Fidelity's like, if you're pricing relative to the US dollar, 1 billion.
Mm-hmm.
So you're literally sitting there, and if I'm running my company, or I'm thinking about my institution or my pension or my family legacy, and I really want to secure generational wealth, if I'm still in that framework of my life and wealth being priced in $1, and I'm being told we're at 107,000 today and we're going to be at $1 billion in 13 years, what's that, a 10,000% return?
Yeah. Boom.
Boom. Maybe higher.
Mm-hmm.
I don't think 10,000 is high enough.
You want to do the math on
I
that?
have to make sure I do the math right on this.
Mm-hmm.
Um,
And then that also leads us nicely into the next point, but I definitely want to see the math on this first.
it's a 10,000x.
Yeah.
So it's 100,000% return.
So it's even higher. Yeah, that's nuts. But I think then that leads us nicely to sort of the next point about, why Bitcoin is important as a treasury asset, which is
Crazy. It's astronomical, but yeah.
yeah, but yeah, which is sovereignty, which is the decentralization factor, and how that leads into the sovereignty.
Yeah. I mean, Obama said it when he was chuckling in one of his presentations. It's like everybody has a Swiss bank account in their pocket. Exactly.
Yeah, and I mean, Bitcoin it's literally it's
If
money.
you want sovereignty, if you want decentralization, and what most people don't understand is everyone's locked into playing this whole banking system game. But there are levels to the financial game. The uber high net worth people, the billionaires of the world that people complain about every day, they don't play by your rules. You choose to play by these rules that are made up by somebody else. They don't do that. They're like, no, I'm my own sovereign person. I am my own nation state. I play by my rules. I set the rules. I'll acknowledge the framework of the systems and the areas I'm playing in. I'll honor that, but I play above that. And then when you look at, okay, really who runs the world, the corporations, the ownership and all that, they don't play by these rules.
Mm-hmm.
That's what Bitcoin offers everyday people. Sovereignty, freedom of capital, freedom of wealth,
Because it's money.
freedom of life.
Yeah, because it's money without borders, without limits.
No boundaries, no borders, no limitations.
Yeah, and I mean,
If you're Elon Musk and going to Mars, are you going to take $1 billion worth of gold to Mars? Are you going to take $1 billion worth of cash? I don't think so.
yeah, that's exactly what I
Are
was.
you going to take $1 billion worth of crypto? Absolutely. I can carry it in a flash drive this big.
Yeah, no, that's exactly what I was gonna say. It's like you can haul all this gold on a ship, and it's just a whole bunch of
Clunky.
yeah, it's clunky. It's like a whole bunch of physical metal that you have to lug around or put in a fort somewhere. Lord knows what the U.S. did, and look how that wound up. But with crypto, it's like you said, you can just put it in a flash drive, digital wallet, and boom.
Did they verify the gold in Fort Knox?
I think so. Yeah, I think they did.
How can they count it?
I mean, I imagine it took quite a while. But
But that's the point of it. It's like I can count my Bitcoin, no problem. And
I hope your digital wallet wasn't in there.
no, it's not in here. And I've owned this phone for 2 weeks and I've already cracked it in 4 different ways. So whatever. Um, so like from a Bitcoin perspective or a crypto perspective, I control, I control my own ownership. I'm my own sovereignty, and that's it. It's that simple. And as every billionaire and hedge fund manager and all these people are coming out and going on CNBC and stuff, they're telling everybody, I'm kicking myself because I haven't done it yet, but now I'm doing it. Yeah. Everybody is seeing it. And the institutions are buying, even the folks of the world like Vanguard that are against Bitcoin. Well, if you're so against Bitcoin, why do you own like 7% of MicroStrategy?
Yeah, and so this is where the next point I think comes in very handily is the institutional acceptance of it. And I think there's two dimensions to that. Not only, institutions that previously were against it now buying it because they have to, but also institutions, like restaurants and stadiums and just any kind of business that charges customers fees are now starting to accept payment in Bitcoin.
It could be payment in Bitcoin. It could, there are a lot of multiple ways that you can use it, but ultimately, if you're someone that really looks at it, you're like, I'm not going to use my Bitcoin as a payment system. I'm going to leverage it and generate cash off of it and use that cash to buy things, but I'm not giving up my Bitcoin. Right? It's kind of like I'm not selling my gold.
Yeah.
But again, gold is an old person's concept. It's for old people. It's not for the new age. Like, we're moving into the technology age. We're in the technology age. Gold doesn't, okay, great, you make some great jewelry, but having gold bars sitting around, like, what are we doing here?
Mm-hmm. And yeah,
it's so outdated. It's insane.
Yeah, that's why it's so amazing to see how broadly it's being accepted, by all of these systems, by all of these entities, because everybody's starting to catch up. That's why
the only reason that gold is accepted across the board is because the United States stole everybody's gold in the Great Depression.
Well, I meant Bitcoin.
Well, Bitcoin's different. You can't It can't be stolen from you.
Yeah, no, I'm saying it's relieving to see Bitcoin accepted on such a wide level because everybody is.
It's inevitable.
Yeah, and everybody's adopting it very quickly. Whether it's something mundane or something big like Vanguard, everybody's doing it across the board.
Everybody is chasing the Bitcoin acquisition. It's the beginning of the Bitcoin accumulation phase. And if you're not looking at this, I would say I feel sorry for you, but I don't. It's in front of everybody's face. I had 80-year-old people and clients referred to us asking about it 5 years ago. They're like, hey, I think this is a good idea. I heard about it. And I'm like, yeah, because it is.
Mm-hmm.
And guess what? They're going to have a great estate to pass on to their heirs because they were way ahead of the curve.
Yep.
Right? The only reason gold is jammed down everybody's throat is because all the banks stole the gold in the 1930s.
Yeah, no, you mentioned.
And so we, in order to protect the banking system, have to sell people on the idea that gold is a treasury asset. When gold is just a piece of metal that does nothing. Mm-hmm. It just sits there collecting dust. It's like I got a bunch of trophies I won as a kid in baseball and golf and basketball. They're sitting in my garage in boxes.
Are those made of gold?
It doesn't matter. The point is there's no utility to it.
Yeah.
So gold is going to be demonetized and left to be used for jewelry.
Because now we have digital gold.
You have digital assets and digital gold.
We don't need the physical one anymore.
Right, because the physical gold doesn't make sense.
Mm-hmm. But I think so. You mentioned the 30s. I wanna kind of touch on that a little bit, especially as it relates to our next point, because Bitcoin really has And a lot of people misinterpret it as, it's a hedge against inflation, but really Bitcoin has a strong, and this is the truth of it, Bitcoin really has a strong power as a hedge against the debasement of currency.
Correct. Bitcoin is not a hedge against inflation. It is an insurance policy against currency debasement. And the US dollar, along with every other currency across the world, is being debased at a faster pace than ever before. And Bitcoin is the only protection. Gold will get you a little bit. Silver probably better than gold, believe it or not, because this upside of silver is higher due to utility. In order for what's going to happen with the monetary systems across the world is the Western countries like the United States and Europe are going to go Bitcoin based and Bitcoin backed, and you'll have the Chinese and the BRICS will go gold back, right? So if you're going to be the most dominant player in the world, you're going to get rid of the utility of gold and deconnect it from the monetary system. So gold will have a run for about a very short period of time, and then if you're holding all of it, sell it all. Right?
Yeah.
Just sell it all, go to Bitcoin. Because take advantage of the appreciation, sell it all, go to Bitcoin, and then watch the demonetization of gold. It will not be connected to banking anymore, and then the value will go through the floor.
Mm-hmm.
Right? So that's kind of the dynamic of what's happening. Bitcoin is not a hedge to inflation. Bitcoin is an insurance policy to devaluation and the risk you have for purchasing power, which 99.9% of advisors don't illustrate properly to begin with. They put in their little Monte Carlo simulations in eMoney and Money Guide Pro. Oh, inflation's 2.7, 3.5%. No, it's 10. That's why so many people are running out of money when they're getting older. Your mathematics are wrong. So when you look at and understand that every night that everybody goes to sleep, central banks across the world are printing trillions and trillions of dollars worth of currencies.
And I think this is where the misconception comes in.
Bitcoin is the protection of that, against that.
Like, I think this is where the misconception comes in, where people, even people who are supportive of Bitcoin, they may think or may be led to believe that it's a hedge against inflation because, the printing of money, and this is a whole other type of thing. But what the printing of money leads to is currency debasement, and that's what Bitcoin is the insurance policy for. It sounds similar on paper, but it's a different thing.
Well, there's a kicker to it because you have to understand sovereign debt crisis, right? And when you just go to the US debt clock and look at their pretty little numbers out there and watch the debt. I mean, the clock moves at an insane pace. So in the United States, as in with Argentina and Venezuela and Turkey and Greece and Europe, and it's becoming widespread, as these fiat and currency systems collapse, and all of a sudden their currencies go to zero in value, and then you have to pay 10,000 whatever to buy a watermelon, and all the people that have been saving and they only have 5,000 in the bank and now they can't afford a watermelon. That's the world you live in now, including the United States. And they're going to use crypto with the Genius Act and stablecoins to try to bail out the U.S. Treasury Department because no one's buying treasuries anymore. So, hey, where do we use U.S. treasuries? Well, we got to back stablecoins and virtual dollars with treasuries. So we found new buyers, and that will work only for a certain point in time to where all of the stable coins like Tether and whatever bank stable coins there are, like the Bank of America dollar, start backing their dollars with Bitcoin versus U.S. treasuries. And then the United States is completely bankrupt. and the system's screwed.
Yeah, so this kind of leads to another thing as well, another a part of it. I guess the last thing I kind of want to touch on, um, a lot of critics, because even though it's so in everybody's faces at this point, everybody knows, I mean, at least everybody who's brushed up on their economics knows this is where things are going. But
No, it's not where things are going.
well, where things
It's where
already are.
things are.
Yeah, but in the sense of it's inevitable. This is the direction we're going.
For sure.
Um, but there are still a sizable amount of people. Thank God it's shrinking, but a sizable amount of people who still criticize crypto and still criticize Bitcoin as a concept. A thing they often say is, they'll because you mentioned bonds, you mentioned U.S. Treasuries, and they tout that and they lift that up, you know they'll compare Bitcoin to bonds and they'll say, look, Bitcoin doesn't generate yield, bonds do generate yield. Why is that wrong?
Well, I can stake my Bitcoin on the network and generate a dividend if I want to. So in the crypto world, there's a thing called staking, where it's like security lending that you do in the investment world. Um, so then I could say, okay, I'm going to loan my crypto to the network, my Bitcoin to the network. It's going to be used to do work on the network to strengthen the network, and because I'm using it as a loan, and I'm getting paid interest on it. So yeah, it can be used as collateral. The other thing too is the next generation is using Bitcoin as collateral. So when the value relative to a currency across the world is going to be priced in Bitcoin, I'm going to use my Bitcoin as leverage. I'm never going to sell it. It's an asset I'll never sell. So then I'll just use it as collateral. I still own it, but I'm going to generate a loan off of it, and then I'm going to purchase real assets. Like I go buy a house, I can buy cars, I can buy all this stuff. And I don't care because the price of Bitcoin is infinite relative to, in our country, a US dollar, relative to an Argentinian dollar, relative to a euro, relative to yuan. Because cyberspace and digital assets and real assets are basically infinite. Fiat currencies are infinite. They're going to get printed to eternity. So the worst thing you can hold is a dollar. The best asset you can hold in the world is Bitcoin. And then there are a few others that you should be invested in.
Mm-hmm. Not that we're, making any recommendations,
It's
obviously.
not a recommendation, but at this point, it's instead of spending 100 hours watching some show on Netflix, spend 100 hours and do your homework on Bitcoin. Like,
That's why we always say do your homework.
the problem with that we've noticed with people in finance is people don't take ownership. They just think it was funny. I was in a meeting yesterday down in Greenwich with a financial firm we do business and investments with, right?
Mm-hmm.
We work in a very technical space. They are the gold standard in this asset class, an exposure that most people don't even understand, so they'll never touch it. And we're sitting just kind of shooting stories across the table. And, the one gentleman we're talking with was telling stories because, we were talking about what they're seeing in the market as well. And what happens is, and what has happened, and what is happening, because we're doing the same thing with Family Office, is you have institutional players are bringing their solutions down to retail, right? So institutional pensions, endowments, companies, corporations, whatever, we're going to replicate what we're doing and bring it down market to the everyday person in Main Street. So there's a process to doing it, but it's an opportunity. And the cool thing is you give people exposures that they normally don't have. Like if I have something that is non-correlated to the markets, has very little value fluctuation no matter what the markets do, and I'm getting paid a 7, 8, 9, 10, 12% annual yield, I like that a hell of a lot more than I like a bond at 3.5. Right?
Yeah.
But it's for a certain investor that has to understand the technicalities. And, he was making fun of, we're talking about, like, he's like, yeah, I mean, our distribution is getting hurt in these channels with the Ed Jones, the Merrill Lynch's, the Wells Fargo's, whatever. It's because they're glorified wholesalers. These are no different than people that have been selling investment products. They were really good at selling insurance and LTC to advisors and, hey, my mutual fund and mid-cap fund is better than yours. That's all they are. They're glorified wholesalers.
And we
They're
got
politicians.
and we got a whole episode about that as well. Be sure to check that out.
Right. So they shake hands, kiss babies, and collect fees. They're not going to recommend you look into Bitcoin at all. Some of them may understand it, but they're trapped because of compliance reasons.
And those are probably the people who are praising bonds the most.
Right, because their back office and trade desk is making a ton of money on bonds. The only people that make money on bonds are the bond traders, truth be told.
It's in the name.
Right. So they're not advisors. They're glorified wholesalers. But they're really good taking people out to play golf and good steak dinners and drinking wine, and they make it look nice and pretty for you. But they're just selling crap. They're selling product. You're just a product of a sale.
And that I think.
But that's why they're not. They're not going to recommend Bitcoin because they can't custody it, they can't control it, and they can't charge their fees on it. So they're going to tell you, oh, it's garbage.
Yeah, and that is why ultimately it really comes down to taking ownership, because...
But it's the same thing. It's like, okay, do you insure, like, let's say you have an art collection or a jewelry collection, right? You buy insurance for that, don't you?
Yeah.
So why are you not insuring your wealth?
Exactly.
That's what Bitcoin is. It's insurance now.
So you can take ownership and insure your wealth, or you cannot insure your wealth, but do you want to...
when you said that, wealth and sovereignty.
Yeah, I mean, do you want to insure your wealth and your sovereignty? Do you want to have that insurance policy? Exactly. But I think, unless you have anything else to say...
I don't know what else you got on the agenda.
That's pretty much it. I think we covered everything. Fundamentally, I think the crux of it is just that. If you want to, insure your wealth and your sovereignty, get on this train on the future of finance.
You don't have time on this one.
It's already here.
There's no time left. If you're not into Bitcoin, and I'm telling you, you have to own it direct. And we work with a lot of people that their advisors don't do this stuff, so they come to us. Not only with this, but like alternatives and tax offsets and things like that, because their advisors can't do it. We honor that relationship. We won't disrupt it. But this is something you can't sleep on. Like, there are going to be the majority of people out there that, for those that take advantage and do this now, 5 years from now, I promise you'll be smiling. Not that I can promise anything or guarantee anything, but this is just how it's going to align. And everyone that's in the know understands it.
Exactly.
And if you don't do it or you're against it, good luck to you, because you're going to need it.
Exactly. But yeah, I think that's as good a place as any to leave it off. This has been very informative. I would say one of the more informative episodes of Crypto and Cocktails. My name, as always, is Tyler.
Tim.
And yeah, be sure to like, follow, subscribe. Definitely share this one. If any, share this one with friends, family decision makers. But yeah, thanks for watching. Stay cool, stay tuned, and cheers.
Cheers, everyone.